Rajiv Mehrotra, Chairman and Managing Director, Shri Bibhu Prasad Nayak, Director Finance, Shri Parmod Narang, Chief Financial Officer, and today's special invitee, Shri Sanjeev Kumar Loya, Managing Director and Chief Executive Officer, IRSBC. At this moment, all participants are in the listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and 1 on the telephone keypad. Please note this conference is being recorded. I would now like to hand the conference over to Shri Rajiv Mehrotra, Chairman and Managing Director. Thank you, and over to you, sir.
Thank you. Good afternoon to all of you, ladies and gentlemen. I am Rajiv Mehrotra, Chairman and MD of RITES Limited. I am happy to welcome you all to the investor conference call on RITES Limited's financial results for Q2FY21. Hope all of you and your families are keeping well during this time of pandemic. I have with me Director of Finance, Mr. B.P. Nayak, CFO, Mr. Parmod Narang. As you all know, we have invested 24% stake aggregating to 48 crore rupees in IRSDC, and we have also taken a board position there. And there have been a couple of questions on the business model of IRSDC in the past. So we decided to request MD and CEO of IRSDC to join us along with the management in this call. And if there are any clarifications on the business model of IRSDC, we'll request his guidance to the investors. As you know, RITES is a mini Ratna category 1 Schedule A public sector enterprise and a leading player in the transport consultancy and engineering sector in India, having diversified services and geographical reach. Now, I will briefly take you through the highlights of company's results for Q2 FY21, and then we can open the forum for questions and answers. I hope you all have been able to access the financial results, presentation, and press release uploaded on our website as well as put through stock exchanges. Let me first talk about the consolidated results for Q2 FY21. Despite pandemic conditions, I feel that the results of the company for the quarter remained satisfactory. We have been able to generate revenue as well as maintain margins during these tough times, attributable to our committed workforce, strong order book which we had in the beginning, and quick execution of projects wherever normalcy was found to be returning. I will now summarize the results on consolidated basis, and as you all know, almost 97% of our income is coming from standalone numbers as a part of the consolidation. So whatever I am talking about consolidated numbers is relevant to the standalone also directly. RITES total consolidated revenue has decreased to rupees 500 crore as against rupees 888 crore in Q2 FY20. But if you see the quarter-to-quarter comparison, previous quarter, it has risen by 33% against Q1 FY21. So I believe that this is a strong scaling up in difficult working conditions. Similarly, operative revenue, excluding other income, stands at rupees 439 crores in Q2 FY21 as against 746 crore in Q2 FY20. That has increased 31% over Q1 FY21. You will notice that this decrease in revenue is mainly due to export deliveries not scheduled during this quarter, and approximately impact of 262 crore is coming only because of this item, and certain disruptions in supply chain and travel restrictions imposed due to pandemic. In Q2 FY20, there was also a receipt of final settlement amount of 91 crore from a foreign client. If you see, there is only a fall of 9% in the operating revenue on YOY basis. And this looks moderate looking at the difficult circumstances we have throughout the country as well as overseas in certain projects. If we exclude the effect of exports, which were not scheduled this quarter, so this looks a reasonable, impact of COVID. EBITDA and PAT stand at rupees 189 crore and rupees 132 crore against rupees 339 crore and rupees 237 crore respectively. In Q2 FY20, EBITDA and PAT in Q2 FY21 has increased 83% and 104% respectively in comparison to Q1 FY21. Why we are giving previous quarter number is because still we are not completely out of the difficult scenario which existed in Q1 comprehensively. We have been able to sustain margins as a result of expeditious execution and timely implementation of cost control measures. EBITDA and PAT margins stand at 37.9% and 26.5% against 38.2% and 26.7% respectively. So we have been able to broadly control the levels of EBITDA and PAT in the operations. Performance of the standalone segments. Company achieved a revenue of 242 crore from consultancy business, which is down by 5.2% over Q2 FY20. But the company has improved margins in this segment at 47.4% as against 44.5% in Q2 FY20. The margin has improved as a result of effective utilization and rationalization of manpower. Leasing revenue stands at rupees 27 crore in Q2 FY21 as against rupees 30 crore in Q2 FY20. The decline was due to temporary suspension of work at certain sites, construction sites mainly, and ports during the lockdown. Profit margins of leasing got impacted because of fixed costs associated with this, like depreciation, remaining intact during this period as well. There were no export deliveries scheduled for Q2 FY21. However, H2 FY21 is expected to see exports to Sri Lanka and Mozambique, and all these products are under manufacturing at production units. Turnkey revenue during Q2 FY21 stands at rupees 154 crore against rupees 179 crore in Q2 FY20. Turnkey margins were maintained at 3.6% during this quarter. Performance of our subsidiary, that is REMCL, also got impacted due to less traction power required by railways during this quarter. REMC revenue stands at rupees 18 crore as against rupees 22 crore in the previous quarter of last financial year, mainly for these reasons. Similarly, profit before tax has also decreased to rupees 8 crore as against rupees 14 crore in Q2 FY20. The revenue from power generation grew at 17% over Q2 FY20. In fact, the windmills actually generated much more than what they did last year. Now, commenting on the order book, company's consolidated order book now stands at rupees 6,661 crore as of September 30th, 2020, with new or extension of orders secured for rupees 948 crore during this quarter alone. During this period, RITES secured more than 60 new projects or contracts, including enhanced scope of work in the existing contracts. RITES has received turnkey works for electrification and construction of ROBs, road over bridges, consultancy works for metros, highways, and also secured first order for locomotive leasing to a fertilizer plant. RITES has also been able to secure detailed design work for Indore and Bhopal metro depots, technical consultancy for construction of airport at Shimoga, and projects against MOU signed with Coal India. They have also started giving some projects for implementation. I believe that the results of this quarter reflect positivity about sharp recovery in business operations, and going ahead, company is still hopeful of a moderate growth in FY21 in anticipation of further easing of COVID-related restrictions or return to normalcy. Now we can open the forum for question and answers. Thank you very much for your kind attention.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from Rohit Natarajan from Antique Stock Broking. Please go ahead.
Thank you for this opportunity. So now that we have already concluded first half of the fiscal, and in the initial remarks, that is the last quarter, you said that in this year, in FY21, the revenue target is to have some single-digit growth. And if I see the numbers currently, if you have to get that even if flat revenue growth, you will have to do a 43% kind of YOY growth in the second half execution. What exactly is the pipeline over there? I mean, are we on that guidance trajectory? Is that intact?
Yes, very important question. And the factual position is like this, that exports, we wanted to start exports from Q3 onwards. But because of certain supply chain disruptions, we have not been able to get. Even now, there are disruptions on certain components like crankshaft, axle, and wheels being imported for these exports. There have been delays of 1 to 2 months in this. Looking at the overall delays so far, we are hopeful that from January onwards, the shipments will start to Sri Lanka and possibly February mid or end onwards to Mozambique. This should take us to almost 550 and possibly targeting even 650 crores of shipments by March. Now, if this alone comes through, rest of the activities would take care of possibly still a single-digit moderate growth. But I'm still, putting a sort of flag on this, that if the situation does not improve or deteriorates, as we have seen things happening overseas, except that rider, I believe that still we should be giving a reasonable moderate single-digit growth, and mainly in Q4.
Thank you. The next question is from the line of Ankit Merchant from Reliance Securities. Please go ahead.
Yeah. Good afternoon and greetings for the season. I just have a few queries. One is related to the order book structure. So what we have seen is that the consultancy order book is still flat at 2,500 crores. So can you give some guideline, or what do we have in the pipeline for the next? And do we see the order book improving in the consultancy segment? Also, if you could share some light on the leasing, because the leasing order book has also dropped significantly. So if you could guide me on that.
Okay, the consultancy order book per se is actually strong. 2,500 crore order book is almost, there to execute in 18 months to 2 years. There are some other major orders being followed, but we'll have to wait a little more to see the outcome. There are major tenders for 3 new DFCs. There is a tender likely very soon for high-speed rail corridor PMC. So we are eyeing all those things, and this may take a little more to materialize. And all this is on competition basis, so we believe that we should remain with a significant role in these projects. So we are eyeing those major consultancy contracts. Commenting on the lease, when suddenly the construction activities were stopped, port operations got stopped, certain clients desired to stop the lease for some period. So about 6 to 7 locomotives had to be put on rest. And I think except 1 or 2, all have again been put to use at different location, or to a fertilizer plant and 1 to a steel plant. So this drop is mainly because of certain locos which we had to withdraw and now being redeployed. But per se, there is no redundancy. Maybe possibly just maybe 1 still remains to be deployed compared to the pre-COVID period. Currently, we have seen a rapid growth in this quarter because few projects came now, we are still trying to get some more work because we believe that we have capacity to execute some more such projects. So hopefully that should also be seen through. Exports, we have not seen any increase in this year because we had actually enough in hands to do this year as well as next year. And because of the travel restrictions, actually new export orders are not yet out. So we'll be pursuing as soon as the travel and other activities start. So summarizing on the order book, I will say that 6,661 is the highest we have had so far. There is a good visibility for 18 months to 24 months, and we would continue to remain cautious about the important national projects coming, whether on nomination or on competition.
Sure, that's helpful. And the new turnkey projects which have been awarded to us, so do we see any margin dilution in those particular projects going ahead? And also, if you could highlight the measures which you have taken to improve the EBITDA margins, because year-over-year basis also we have seen some improvement, and how likely are they are going to sustain in, say, next 2 to 3 quarters?
There was a very moderate, maybe 5 to 10 basis points reduction in the price offered by us for the new turnkey orders. I think we have clarified that this much small, moderate improvement we can always try to make through the cost optimization for such projects, which we already started doing, not only for turnkey, but for other projects also. The cost profile of RITES is that manpower cost is almost 45, maybe 50% of the total cost. So whenever a situation of this was seen, in March itself, we started positioning that if this goes longer, how do we do? So we took 2-3 steps. Certain positions which were on deputation, we cut short the tenure. People went back to their departments. Certain positions on contract were not renewed. Certain positions which were in senior age group were foreclosed because of the health challenge also. And we have not filled up any retirement vacancy. So put together, so far we have been able to achieve a reduction of about 281 numbers in last say about 9 months, which is very, very unusual in the operations I have seen in RITES in last 13 years. But the business model permitted us to look at this possibility, and I think this has come very handy during this pandemic.
Sure. If the operator allows, I just have one more question that's related to the capex. So we were expected to spend close to 400 crores, capex, 80 crores for locomotives. So have we already done that? And 150 crores we were doing some capex for the building as well. So any update on that?
Yes, building work in Calcutta. We have one regional office for East and Northeast. That work has started. There is a new office complex near AIMS. So we have big payment of second installment there, NBCC World Trade Tower. On locomotive side, yes, we have placed orders, but we have cut down the requirement to 40 crore rupees because this year already there is a pressure on the new leasing demand. So that still remains for 40 crore rupees.
Sure. Okay, I'll come back in the queue for more questions.
The CapEx plan is on. Yes.
Okay.
Thank you. The next question is from Jonas Bhutta from Phillip Capital. Please go ahead.
Good afternoon, sir, and thank you for taking my questions. Sir, just one question. Wanted to understand. So, in one of the prior questions, you highlighted that you are also vying for some consultancy projects in the upcoming HSR projects. So these are the one between Delhi and Bombay or Delhi or Ahmedabad, right? So just wanted to understand from a qualification perspective, RITES, how much RITES did benefit from the existing HSR project, basically in terms of consultancy, and whether you are seeing for a scope expansion, given that you've got the experience on the Mumbai Ahmedabad. So in context to what the total project size is versus how much is RITES opportunity within this entire HSR ecosystem? If you can elaborate on that, that would be great.
I think in the one of the previous briefings, I have said that we are in touch with certain Japanese consultants because they will have to be there because this is being funded by JICA. So they will have to have a Japanese consultant as the lead consultant for such project. We are in very advanced stage of discussion on this issue, but I will like to be excused from sharing more details on this. I'll clarify what we are doing. We are almost about to conclude our understanding with some leading consulting companies to make a consortium to submit a bid for this project. Now, whether we get this or somebody else is still, an issue to be seen. But as far as our preparedness to eye this opportunity, we are very strongly after this, and I'm sure we'll get a meaningful role. Now, to get an idea, what could be the size of this pie? I would again say that for such large projects, the consulting part, or we call it PMC part, could actually range from 3 to 5%. I would not to be very specific to the price which might actually finally emerge. So I'm giving you a range, 3 to 5%. And you would have heard that they have already given work award for 25,000 crores of construction work to L&T. So we have on an average maybe the fees possibility of 1,000 crore, where maybe 3 or maybe 4 maximum consultants could join in, a combination of Indian and foreign consultants to present a technical team for this project, which is going on as perceived by us.
So just on that question, so the total EPC pie within this 1,08,000 crore Bombay Ahmedabad project is about 65,000 crores, and the 3 to 4% bandwidth that you mentioned, range that you mentioned, is will be applicable on this 65,000 crores, or will it be on the full 1 lakh?
Right.
Only on
you're right actually. Construction, electrification, signaling part, not on the rolling stock part.
Not on the rolling stock part. So basically, we are looking at anywhere close to 2,000 to 2,500 crores kind of total opportunity, and within that, it will be distributed among 3 or 4 consultants.
Actually, they, to my knowledge, they will go stepwise. They might just do for certain civil works which are already decided to be started. So this might go into phases. So we see a major phase coming out very soon, and we are actively pursuing it. Yes.
And sorry, if I can squeeze in one more, sir, in terms of not from the current year perspective, but over the next 2 to 3 years. So you had elaborated in your previous conference calls, the roadmap to expand the scope of your consultancy business beyond what we typically look at, which is slightly railway heavy. You had talked about getting into certain road projects internationally, something that you, I think, won in Bangladesh or something like that. And then you were trying to get into certain infrastructure management projects in Kerala and stuff like that. Can you just, help us understand where in the journey are we in the last 6-9 months, whether much development has happened, and when can we start seeing meaningful fruits in terms of order inflows from these diversifications, if one can call that?
Yes, Jonas, we have already won this highway work in Bangladesh. We have already started deploying team there. So that project is...
There was more expected, as in, it was
yes.
sort of then...
Yes, there are 1 or 2 projects which are in very advanced stage of award. And due to, limitation, I cannot announce a project till we have been declared L1. So wait a little more. It's going as conveyed to the group in the past. We are pursuing that. It is going on.
Sure. I'll come back for the follow-up in. Yeah. Thank you, sir, and I'll come back in the queue.
Thank you. The next question is from the line of Pankaj Bobade from Axis Securities. Please go ahead.
Thanks a lot for taking my question, sir. So you mentioned about manpower cut down. In order to save on costs. So can you please elaborate more? How much savings have we done this quarter or rather, this quarter we have booked around 113 crores of employee cost, right? So would this be the new normal, or is there anything more to come? And second question would be, as we have the chief of IRSDC, I would like to understand what is the business model of the JV or the subsidiary, the JV where we are partners, and would it be a game changer for our business going forward?
Okay, Pankaj, taking your two questions, let me start with the second one. I'll request Mr. Lohia, who is the MD and CEO of IRSDC, once we finish first round of questions, then I'll request him to brief on, because there might be questions, Pankaj, from others also on IRSDC. So let us hear the questions. Once we finish first round on RITES questions, then we'll request Mr. Lohia to chip in and give his views. Now, coming to your first question on the manpower, look, in H1, I will say, because April onwards we started doing this exercise, we have been able to reduce manpower cost by 8.4%. And the manpower structuring in this company is a combination of regular, deputation, contract, and then retired and re-employed certain expertise we hire on that basis. So this combination actually proved to be very helpful in cutting down the requirements for about 6 months to 9 months, which we have seen going through already. But it does not stop us from expanding should the business so require. And you would have noticed in our website, there is already an ad for certain categories of maybe 140 or so. But this would take care of next 6 months to 1.5 years, 2 years. So this is a flexibility which we have very gainfully used to manage the cost during this time. And you said about the new normal. Yes, if we are not able to control the manpower cost, the business has to be, competitive and relevant to the cost which client can bear.
So manpower cost per quarter, would it be in the range of 120 crores?
By large, this has been like this. Yes, I think 480, 490 crores per year. But new inductions, we'll go very careful. Only when the new business is in hand, we will expand.
So this is structural. I mean, there would not be any reinstatement or revision on the same, right?
Well, Pankaj, if we had...
Unless until we have a new business.
If 9 months we have paid salaries and incurred costs, this has been a wastage because 9 months have gone like this. We again see still 1 or 2 months going like this. It is not normal in Delhi. I believe this is not normal in Mumbai, and we hear from Bangalore also it's not normal there as well. So 2-3 key business activities areas we are seeing are still affected. So it's good that we reduce this number. The moment we feel that the projects can shape up, we can hire.
So your voice is cracking. Sorry.
We can hire the same or others when the business picks up.
So your voice is cracking. Sorry, I couldn't understand what you said.
Situation is still not normal everywhere. It is good that we reduce the number for these 9 months. Can you hear me, Pankaj?
No, I'm not able to hear you.
The admin, can you please...
Pankaj, we can hear the management clearly. Request you to call us back from a different device, maybe.
Sure.
Okay. Thank you.
We'll move to the next question.
Next question.
Yes, the next question is from the line of Parimal Methani from Credential Investment. Please go ahead.
Thanks for the opportunity.
Yes.
Recently, sir, a lot of high-speed contracts have come up for bidding. And since you being only 3 players being for a competitor, none of the players have got any contract as of right now. Most of them have gone to the private players. Is it because of they're quoting a low bid price, or how the thing is, especially towards the turnkey project? And in the quarter gone by, we have won almost 860 crores of turnkey projects. So is it on a low bidding price? If you can explain, sir.
So Parimal, if I got your question right, you are referring to the NHRC contracts.
Yeah, sir.
So far, only EPC contracts have been announced, and this one package has gone to L&T. we are nowhere in the league of this type of EPC contracts. See, we have started doing a moderate size of maybe 1,000 to 2,000 crores per year EPC contracts, mainly rail line doubling, electrification, signaling, and workshops. So we do not even qualify to bid for such mega construction projects, and we are not actually equipped to handle that construction side. But having said that, in just one of the previous questions I answered, that we are seriously working on closing in on a consortium which will be a serious bidder for the PMC work for this. Wait a little more and then see the outcome. We are alive to the possibilities where we can get business share from this prestigious project.
So, but for this consultancy work, would it be a competition for any private players here? Because as we have seen in this, because my understanding is consultancy work, we are number one in India in terms of doing for the railways. Do you see any competition from any private player coming for that, sir, in terms of getting orders?
It's very difficult to say because the tender is not yet even out. So how many bidders would be there? But I can assure you one thing, that we will be one of the most serious bidders in this game, whether private or international players come or local come. And we have already done a very meaningful exercise to make a group to put a serious bid for this.
And sir, last question on the IRCC, if you can highlight afterwards all your on the phone call, it will be much better, sir, the model and all that.
Yes, I think once we finish round one, Mr. Parimal, we will request MD RSDC to share his views. Yeah, thank you.
Thank you, sir, and happy Diwali, sir, to all of us.
Thank you. Same to you and your family as well. Yes.
Thank you. The next question is from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Most of my question has been answered. Just one question. So, you mentioned that there was some one-off in Q2FY20 of 91 crore, some settlement with the overseas client. So, that 91 crore is recorded in the other income?
Yes. Other income of Q2FY20.
Okay, so that 141 crore has come down to 60 crore. So that is mainly due to this 91 crore of one time.
Yeah.
Okay.
Absolutely.
Thank you.
Thank you.
Thank you. The next question is from Rohit Natarajan from Antique Stock Broking. Please go ahead.
Yeah, thank you for this opportunity. So my question is more to do with the consultancy segment. Sir, what could be the quality assurance opportunity that you have within this space? And also on sector piece, that is railway capex of usually happening on 1.5 trillion. What exactly is the quality assurance component within that complete amount that is distributed every year? And what is RITES market share in it?
Okay. This we have in fact clarified earlier also. Let me just put together the whole process. The procurement of certain items is done. The procurement of certain items is inspected by RDSO, like the girders, etc. Machinery is COCMO, and all other items like rails, electrical items, certain mechanical items, springs, axles, wheels, rails, all this is being done by RITES. Now, these items are not necessarily capex items. Of course, these are capex when the new line is being set up. There is a significant consumption in the refurbishment or rehabilitation of tracks also. So this is impacted by capex as well as opex. A ballpark figure could be that in the procurement of railways, about 35 to 40% items would be relevant to our inspection, and our inspection fee would be around 0.9%. So you can see around 350 to 450 crore rupees of space available right now. This may get impacted if the purchase is delayed or it is shifted to other quarter or other year. But other than that, we have a very exclusive presence throughout India. We have about 12 offices which are doing this service to railways throughout the country, and hundreds of items are being inspected.
So, if I understand it correctly, at least we should get 350 to 400 crore of quality assurance every year. That should be the order flow.
Yeah, I think that based on today's thing, yes, that's the correct.
Okay. Sir, my second question is more to do with the non-high speed or non-railway consultancy orders. Any big ticket opportunity that you are looking at?
Metros is the second segment. We have given 2 bids for Metro GC. I'll take excuse for not naming them because I would not like to name a client without his consent. So these are projects in India where we expect announcement in next maybe 1 or 2 months. So other than railways, our next forte is metros. The next emerging mega project is national high speed, where I have already said that we have already closed in on a consortium agreement. So railways, metros, high speed, we are already working on DFC. We are looking at highways also in India.
So if you could quantify that number, do you want to give a ballpark figure? How will be the non-railway, non-high speed consultancy order would look like?
Order book also I have with me, but to give you a flair on the
no, in terms of even in the future trajectory of order inflow and how that would overall scheme of things would look like, that will also help.
I think the metro investments are going to look up. So
and any number, what would the consultancy portion over there, and any number as such that you want to?
No, RITES target could range around 200 to 300 crores shortly. Okay. On the PNC side, consulting from metros. Highways, we are right now doing 110 crores. So I see another 20-30% up in near future because we are getting foreign projects which are slightly more rewarding.
Okay.
Then on the high speed, I have indicated that the consulting part could be around 1,000 to 1,200 to 1,500 crores approximately, and this will come in 3-4 years. So whether we get 1/3 or 20% or 25%, we'll have to wait a little more. But this is a major mega consulting assignment which is unfolding. And other than this, there is a mega tender going on for DSCs, 3 DSCs consulting, which is yet to close in. So that also would be a very high consulting. So I think we are eyeing other than IR directly. We are also looking at metros, highways, and also possibility. We have not yet concluded any say MOU with anybody, but we are also looking at participating in a limited way with this highway. The annuity model contracts, HAM model projects.
So you meant to say you would participate in a HAM model project
on a very limited scale to begin with. Okay. So we have appetite to execute. We have appetite to execute highway projects. The complete balance sheet is completely debt free. So why not try a little more on the highway side? Because a lot of highway projects are actually coming up in the country.
Okay. So that means
limited way. I again use the word limited way.
Yeah. Any quantum of investments, what would it look like?
No, not yet decided. I'll not share till the board, but yes, this is a possibility being evaluated. Since you are asking for the possibility, maybe a little later we'll come back on this.
Yeah, sir, there was a proposal by NHAI stating that even consultancy, a complete integrated package, including consultancy, will be outsourced to GC scope of works. Is there some thought that you have given on it?
I have not seen any concrete order on this issue, but let us wait a little more, and that makes sense actually. To have a complete responsibility from design to execution is a better idea.
Sure, I will get back in the queue. I have a few more questions. I will get back in the queue.
If we are through round one, maybe we can take Mr. Lohia for IRSG. All I think. Mr. Raman, if the round one is over, can we have him for 5 minutes and then?
Yes, Mr. Lohia is on the line. He's connected.
Yeah, Mr. Lohia, perhaps just brief us on your business model.
Yeah, good afternoon. Thank you for giving this opportunity. In fact, as far as IRSDC is concerned, very, very briefly, essentially we are the nodal agency for entire station development in the country as per the approval of the Union Cabinet. And we are also the main project development agency. So the task assigned to IRSDC is the project development and management. So the concession, etc., would be awarded by IRSDC for and on behalf of projects directly entrusted by Ministry of Railways or through Rail Land Development Authority, which is also one of our promoters, 50% owner. So the entire station development has to be done using the land which is available in and around the station. So we have to leverage the land. And recently the government has also approved in principle the user charges on passengers, for which a notification is to be issued by Ministry of Railways soon after some more approvals within the government. And for the entire process, we get a success fee. That success fee presently is 10% of the total premium, which includes the cost of the station development also. So that is the fee which IRSDC gets as a success fee. We have also one vertical, which is station facility management standalone. So essentially, we become the operators of the station. So that the Union Cabinet has also approved that IRSDC can take up the station facility management for the stations which are not likely to be developed in near future, or they are not envisaged presently. So we have taken up 5 such stations. 90 more stations are going to be offered to us very soon. So we'll take up the facility management of those stations, just like you have the model for the highways where you give it to a certain private player on O&M. So we'll do it on PPP basis. So we had already 5 such stations, and the experience in last more than 1 year, we have been able to make substantial improvements. And based on the confidence generated in Ministry of Railways, because this was a new vertical, absolutely new vertical in the country, and we did it on a different model, which is called a management contract model, as is the practice in hotel industry. So Railway is now confident of giving us 90 more stations. So that is very, very brief, I would say, the business model. The 10% fee is also variable in case the target return to our promoters is less than 22.5%. So in that case, after we award a few more projects, then this can be revised upwards, so that we are able to give to our promoters a target return of 22.5% on the equity invested.
Good. I think that's good to begin with. We can now continue with the questions, Mr. Raymond.
Thank you. The next question is from the line of Venkatesh Subramaniam from Logic Tree. Please go ahead.
Yes. Good evening, sir. Season's greetings. I have actually a big picture question, sir, because all the specifics have been talked about. If I have to take a 3 to 5 year view on RITES as a company, and I think it's a great play on the Indian railway sector. What do you think investors like us can look at as a vision? Is there a possibility that RITES can actually have a top line of $1 billion, which is roughly 7,000 crores over a 3 to 4 year period? That's number one. Question number one. And number two, the whole thing put together, station development, RMECL, everything together. If I have to do a crystal ball gazing, say 4 years down the line, what do you think is the kind of order book that RITES can have at that point of time? I know that it's a very kind of forecasting kind of question. I won't hold you to it, but we want to kind of visualize what this company could be.
Mr. Venkatesh, very straight but very difficult question. Interesting as well. We have seen growth of last 5 years at 19-20% average CAGR. So for a infrastructure company to grow at this rate is possible, we have proven. And now going forward, when the government is saying that we will make so much of investment in next 5 years, I mean, forget the temporary disruption we have, but look at the plan and look at the announcement last week that yes, we intend to implement the NIP pipeline. If the NIP pipeline starts rolling out, say more liberally now, the companies like RITES we are not just one sector specific company. We have gone into railways, highways, metros, airports, ports, and then also the energy management, leasing. So if there are new opportunities, we will definitely be chasing them. The growth, 19-20%, was there when the investment in the country was at almost half of the level than what is being perceived in NIP.
Right.
So if National Infrastructure Pipeline is targeting double investment than what has been done in the past 5 years, so it would be very reasonable for anybody to expect slightly accelerated growth from RITES. I'm not saying that maybe 40%, but since you are asking a possibility, I am getting an answer from a possibility which is in public domain. The NIP is at double the investment rate per year. So within the country, the opportunity for double rate acceleration exists. Then added advantages that this company has worked in so many countries so far. Right now also we are working in a couple of countries and we are pursuing certain projects overseas. But I would not like to specify what type of projects and where they are. Let us wait a little more. When the time is right, we will share. So I think put together, yes, there is reason to believe that such companies have potential to grow faster, but we are not an overnight surprise. We can't give you just that tomorrow this has happened. It's a steady but definitely moving up scenario. And I think that is where my team is firmly placed in those sectors which are growing in India. We are growing outside India. We have done a metro project in Mauritius, which one phase is already operational. We are doing a port project outside. We are doing highway project. We are likely to get 1 or 2 projects soon, more maybe before this year ends. Put together, this is a company which is working like an MNC from India, and we believe that it can grow faster.
Super, sir. Thank you, sir. And just one more, just to add on. So in a kind of a conservative scenario in the last 5 years, we have still grown at 20%. So if the prospects are good, we can grow much above that. I think that would be the summary of that, isn't it?
Yes, that's the correct actually assessment of the situation.
And the second question is in terms of order books. Right now we have an order book in excess of 7,000 crores. So as I said, if all these opportunities that you're talking about and RITES is uniquely positioned to exploit these opportunities, would it be fair to assume, say, something like a 20-25% order book growth every year?
I think just allow me to stay short of a definite number. I think if the investments are growing at double the rate, I think this year 2021 is gone actually. This is the rest. So any meaningful forecast now should actually look at 21, 22. And I see the capex plan being pushed up by the government soon.
Sure. Okay. And do you believe that the government will, considering the financial situation and all that, sir, they're committed to the financial budgets in terms of allocation to railways, sir?
I think allocation to railways, even this year, commitments are being met. Next year, also I see some moderate increase because we believe that the high density network, highly utilized networks, they will definitely be doubled and electrified. So there's a lot to be done on HUN networks. So I believe that this capex program would continue.
Okay, sir. So that's very beautiful explanation, sir. Thank you so much.
Okay, thank you.
Thank you. The next question is from Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Yes, sir. Thanks for the opportunity again. Sir, you mentioned that we are targeting, let's say, 550 crore or maximum 650 crore of export in this year. So let's say whatever it be, 550 or 650, the remaining portion out of 1430 crore of order book, all that will be executed in FY22 or some will flow to FY23 as well?
The balance of export orders would definitely be done in 21-22.
Okay, so balance, whatever left will be done in FY22.
Absolutely.
Okay.
Remaining export balance would be done in 21-22.
Okay.
Yes, thank you.
Thank you. The next question is from Keshav Garg from CCIPL. Please go ahead.
Sir, I wanted to understand our turnkey division, which last year did around 670 crore of work. So how much approximately capital employed in this division?
Capital employed? Okay. Let me tell you that the business model of turnkey is such that this operates on almost a zero cash flow basis from RITES. Almost, I'll qualify why almost. The client gives 20% advance, and this is recoupable in lot of 10%. So whenever we receive money, it is disbursed to the project. Little bit of money, you can say we get a PNC charge of now currently at 8.45%. For 1 or 2 months, we have to pay salaries and then recoup from the fee which is given in advance. So to that extent, a small component of working capital is used, which is insignificant compared to the projects in pipeline. So this is almost a no capital using proposition. Turnkey business.
Okay, sir. Sir, and also you mentioned about getting into road construction. So is it road construction consultancy or EPC?
This would be taking concessions on ownership basis. As per our existing profile, we have done some turnkey work, we have done some consultancy. We may not be allowed to take more than 1,000 crore rupees of worth of project.
But actually, we are in a very high return on capital business of consultancy, and you are getting into a totally third-rate business of road construction, which is totally, nothing compared to our existing business. So actually, basically, it will pull down our return on capital of the whole business. So it's a highly avoidable part of business. Why not we have concentrated in railways when there is so much opportunity?
We are only evaluating a possibility. We have not even gone for investment approval on this. But looking at the expansion of roads in India, every district road in this country is announced to be connected by a 4-lane road. Every district in this country is already announced in last budget to be connected. If such a big construction work is, scheduled in next 4 or 5 years, we cannot say that looking at the return on capital alone. I'm saying we'll choose a good project which can give some return on equity, which can give some fees, which can give some EPC income, and put together if you are reaching that return on equity. What is wrong in that? But in a limited way.
So what is your bare minimum IRR below which you will not proceed with any project?
We are just evaluating. If we find this meets at least say 18 to 22%, then only we look at it. Right now, I am only looking at the possibilities. See, we cannot shut our eyes from a reality that this sector is very fast growing in India. Liberally, money is being put on roads, whether it's state highways, national highways, or district connectivity. Somewhere we have to see some more meaningful role for experienced companies like RITES. But we are not even gone to our board for a specific approval. We are only talking possibilities in this sector. In that reference, I said, yes, we are looking at it. I did not say that we have closed 1,000 crores investment. Not at all.
Okay, so that's very hard.
I hope we will evaluate. And thank you, Keshav. Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Rohit Natarajan from Antique Stock Broking. Please go ahead.
Thank you for this opportunity again. My question is more to do with the IRFDC front. If you could elaborate, how are these projects different from what RLDA award set? Like currently there is a Delhi station development tenders being floated around, and even some Mumbai talks about Mumbai station development going on. So how are these stations identified and how are they awarded? Also, there are some projects IRFDC has done, like Habib. What was the model over there? What was the land monetization done? How much was the projects done? And what is the kind of ROE and returns that you have made so far?
Rohit, I thought we'll have Mr. Lohia for policy-related clarification. But let me just reiterate what he has clarified, that we are looking at very limited number of projects on our investment basis. We are also looking at facility management service for 90 projects. We are also the sole agency nominated to manage the concession of railway development being done on the railway land. So I think a mix of these 3-4 business possibilities will take IRFDC forward and looking at that, we have also decided to do our investment there. Now, if you want a specific answer on Habibganj and what else you said, Rohit?
Gandhinagar project.
Gandhinagar. I'll request Mr. Lohia to give some brief response on this as well.
Okay.
Please.
Thank you, Rohit. RLDA has also been, we have been interested all the 8,600 stations on 1st November 2018 by Ministry of Railways with a proviso that we have to do the bundling of the stations so that it is overall cost neutral to railways. So definitely we could not have started the project development exercise of the entire number of stations. So we based our choice of first set of stations phase 1 on BCG report, which were appointed as the strategic advisors, and based on which we are presently working on 61 stations. As far as New Delhi is concerned, New Delhi is assigned to RLDA, and RLDA is doing the bidding for that, whereas CSMT is being done by IRSDC. As far as Habibganj and Gandhinagar project are concerned, Habibganj is the first project in the country which has been done on PPP model, where only land monetization is the funding source for the station redevelopment, and there it was given for 45 years lease. The project is in advanced stage of completion, and by December 2020, the entire station would be redeveloped, and it is coming out very nicely. Though it has been hit slightly by the COVID, because of the COVID, the real estate sales have taken a hit. However, the station work is going on. Gandhinagar is a very unique project which is being done in a partnership model with the state government, where state government, they have combined their two already developed properties, namely Mahatma Mandir, which is one of the biggest convention center in the country, and helipad exhibition ground, with the station redevelopment and the 18-room 5-star hotel, which we are building on the top of tracks. So for this we have a JV with the state government called Garud, where 74% is owned by the state government and 26% is owned by IRSDC. And we have invested a small portion of equity. The major funding has come as grant for whatever 26% of the total project cost is concerned, and quasi-equity. So that is on EPC mode. We have appointed Messrs. Leela as the operator for the hotel and the Mahatma Mandir Convention Center. That will also be completed by December 2020. That will be a very, very unique project, the first ever hotel on top of tracks in the country, and very few in the whole world. It's a very, very unique project. In fact, I would request you to go to our website and see more details on these projects.
Sure, sir. I appreciate those remarks. Sir, my second question is more to do with what will be the balance sheet exposure, how much will be the quantum of capital required for doing all these projects, and will there be a support from an further equity contribution, or maybe some loans and advances from IRCON to this particular joint venture? Not IRCON, I'm sorry, from RITES to this particular joint venture.
We have invested only a very small portion of equity. Remaining all is from grant or quasi-equity. So all money has been given by Ministry of Railways towards the 26% of the total project cost, which is standing at 750 crores today. So we do not foresee any further investment, especially required from RITES. If there is some variation, so we would be getting some cash generation from Mahatma Mandir and the helipad exhibition ground. In fact, the state government is contributing 74%. Habibganj is no cost to us because it was on PPP. The cost which we incurred was towards project development and the project management. And I am also very happy to share that the developer had asked for additional built-up area. And yesterday only he deposited 2.93 crores for the additional built-up area in one of the subplots. So we have some revenue generation from that. So whatever money we had spent for the project development, so that all is getting recouped from the fee which he is paying for the additional built-up area which he had asked. And other projects, for project development, yes, we incur a fee, but ultimately we get as part of the success fee, which I had mentioned, 10% of the total premium. So we do not foresee any further equity infusion from RITES into IRSTC.
Okay, I appreciate that part on IRM.
So next question, Rohit.
Yeah, on REMCL part, sir, if you want to touch upon what exactly is the stages of that phase 2 and phase 3 tenders looking like.
Yes, there are 3 tenders already going on. The first one is for 1600 megawatts. This is scheduled to be received today with completion time of 18 months. 1600 megawatts of developer mode on railway land, no investment by RITES or REMCL, is scheduled to be received today. The next is 400 megawatts. This is scheduled to be received on 4th December, where the equity component would be put by RITES and railways together through REMCL. Next one, 1000 megawatts is parallel to the tracks, and for which there were clarifications on land, and then they have clarified that any place where more than 3.5 meters at least is available freely on each side, only those sections would be taken up in the first phase. So I think they have accordingly revised the tender opening date to 24th November. So today we receive for 1600 megawatts, 4th December, next 400 megawatts PSU model, 1000 megawatts is 24th November. And I believe there is a reasonable buzz in the market about this.
Sure, sir. Thank you, sir. That's it from my side.
Next question, please.
Thank you very much. That was the last question in queue. As there are no further questions, I'd like to hand the conference back to the management team for closing comments.
Thank you very much, all the participants, for very interesting questions. I would like to summarize the operations like this, that despite challenges in the country in taking up the projects for execution, availability of labor, material or machinery, spares, my team has scaled up the execution in this quarter. The order book addition is also very encouraging, and I am sure we are going to focus on execution in remaining months of this year. The exports have been lined up adequately in 3 production units, which are going on at ICF, MCF, and DLW. And hopefully from January onwards, the shipments will start. There is reason to be optimistic about the companies like RITES, who have a proven track record and not to get disturbed by the temporary disruptions. We all are looking at business expansion and cost management simultaneously. And thank you very much for being with us in this call today. Thank you. All the best and have a nice Diwali.
Thank you very much. Thank you all for being a part of this conference call. If you need further information or clarification, please mail at gaurav.g@conceptpr.com. That's GAURV.g@conceptpr.com. Ladies and gentlemen, this concludes your conference for today. Thank you for joining us. You may now disconnect your lines.